Okay, welcome to our market update here on August 23rd. It's so we've got Tuesday trading complete. So we have the first 2 days. I often say it's important to understand, are we going to get follow through Tuesday on the move that we saw on Monday or not? And excuse me. In this case, we did see follow through to the downside. And so my last video, I talked about, and you can always see that, you can always see the last video update about the broader market. That is in the description. I talked about how we were heading into, or we had started our daily cycle decline. And again, Cycles 101, that link is in the description as well. Really important stuff. It's the proverbial quote unquote timing the market, right? And so that update was on the 20th, right? So it was before our Monday candle, right? So and I talked about how this area right here is a gap, right? And gaps tend to get filled. And that's what we did yesterday, right? We actually closed right on the gap. And then today you can see this really ugly candle, day 40, where this is essentially serving as a lower high. So it's day 45, right? Again, you can imagine, we know what the catalyst is for this week. It's the speech in Jackson Hole by the Fed chair on Friday. And so you can imagine this is probably not going to get resolved, right? We're at best, we'll get probably some consolidation, maybe inside this gap area, or maybe right above it or right below it, right? So just in this, I suspect this gap zone, we sort of don't go too far from it, right? If that makes sense. The market is essentially waiting on a catalyst at this point. The next sort of higher low that you'd want to really, be mindful of is that 40-80 area, which corresponds to some weekly levels. And if you look at the weekly, this is what looks really ominous, right? This is possibly a weekly cycle top on week 9, right? This is week 10. This is the week that we're in. We still have 3 days to trade. So this candle can change dramatically, just like the monthly candle changed. The monthly candle was green. Or excuse me, it was green. Right. It was green and now it's red. We'll talk about that next. But this is a weekly swing high. I'll just draw the lines to be super crystal clear. This candle marks a high, right? This is week 9. The low for this candle is 42.18. Once we went below 8.70 cents. Once we went below that level, that was your swing high. And notice we actually gapped down, right? And we gapped down on a Monday, which means we now have a gap on the weekly chart, which is a helpful area back on the upside, right? When we're trading this back on the upside, we can use this gap up to the 42.18 area, 42.19 call it, as a sort of quasi target. And so that's important. We gap down to form a swing low, or excuse me, a swing high, a bearish swing high on the weekly. That means this is possibly the high for this weekly cycle. Notice the last weekly cycle was really bearish. It had a high on week 5. So at least in this case, we've already made it to week 9, right? And this cycle we didn't top out till week 26. I mean, these cycles all here are all very bullish. Top on week 24, week 22, week 26. Then we get a top on week 13. Then it's on week 5. So the question is, are we getting back to one of these where we're going to top out we're going to get a more sustained rally? Because this could end up being a higher low, right? Something like this, especially with that catalyst from the Fed meeting. So if you wanted to draw this out, right? This is how this is played out. We went up, then we made a higher low. Then, there were obviously lows in here, but this was a pretty powerful sort of trend move up to this top. And now we've come down. Maybe we even slip a little bit further down to that 40-80 area, right? Maybe we even have a little bit of a false breakdown. And then we move higher, back test higher. That's one scenario, right? That's your bullish scenario. And obviously, if you're long, that's what you're hoping for. The other possibility, right, coming out of this, right, is something so it starts this is your alternate path, if you will. So something like that, and then we come up, and it's oh, psych. And then the weekly cycle decline continues, right? Maybe we get and remember, we just had 2 really short weekly cycles. So a 16-week cycle and a 20-week cycle. So this next one probably is going to be a little bit longer. So if we are getting a high on week 9, that would mean a decline for more than 10 weeks, which would be an awesome trade if that's what plays out. And so next we have to we're going to have to watch this very closely. So think about that. As I always talk about how candles form, this could reverse violently, right? Like the catalyst from the FOMC meeting, we could get a violent reversal. This builds a sort of lower wick. Like look at this candle. At one point, I'll zoom in just to make sure everyone is like seeing this. This candle was bright red at one point, really bearish. And then we got a rally on a lower time frame, went all the way up here, and then we got followed through the next few weeks. So we could see something like that. This essentially becomes a false breakdown pattern on some time frame. What you do want to also be mindful of is we're still perched well above the 10-week moving average. And so that's healthy, right? Because if we're assuming this is not a weekly cycle decline and it's just a daily cycle decline, then we would expect that maybe we flirt with the 10-period moving average, but we wouldn't expect that like we're going below it, significantly below it, closing below it, etc. It's rising now clearly. And so you've got a lot of really clear mile markers to give you a sense of, like, is this just a daily cycle decline or is this a daily cycle decline that's beginning the weekly cycle decline? Really, really important sort of inflection point here. And again, that Friday speech is going to be your catalyst. And so that was your weekly. And I'll look at the monthly really quickly. And again, speaking of how candles change, how candles form over time, this is a monthly candle. Well, at this point, we actually do have, so we got 3 more trading days this week and then 3 trading days next week. So we've got 6 more trading days for this candle to play out. At one point, this candle was nice, bright green. It was a beautiful swing low, right? It made like this was a swing low because of this candle. Now we're below that level, that 41.85 level that we needed to be at to be a swing low above this series of highs. And so now we have to, again, watch this. Does this candle go full red, right? That would mean a move below 41.12. We might see that before the FOMC speech and, we get some kind of resolution. Again, either a violent reversal up, which would be the more likely, which you would expect more likely, or a sort of confirmation, probably a spike up and then a move lower. That seems less likely. But again, we're going to be watching for these signals because if this is a long-term bottom, if June was a major cycle low on month 27 after a top on month 22, we're going to see that indication on the monthly chart. We're going to see this monthly chart get repaired. If not in August, we'll see a recovery in September, or we'll see a further slide. And that's the other thing. Wherever we print the low for this month becomes an important mile marker for September. If we get below that level in September, we're now possibly starting a downtrend on the monthly chart again. Like right now, we're trying to start a little nascent uptrend on the monthly chart. And so we want to not get to backsliding. And again, the indications are that this is a 3-year cycle top and that this is going to turn out to be a lower high. That's what it's looking like right now. But again, we have to continue to watch the evidence. We don't want to be premature here, and we certainly don't want to let our bias kind of get out of control. So that's the picture for the S&P. I'll look at the other indices really quickly. It's the same story, slightly different count. 42. So Qs was day 46 instead of day 45. Same kind of idea, a gap down on a Monday, which creates a gap on the weekly chart, and now a possible weekly cycle high on week 9. And if we look at IWM, so IWM is 6, day 46, same as the NASDAQ. And again, not to belabor the point, same idea, potential weekly cycle top on week 9. Notice that the IWM, I mean, this monthly candle is still looking pretty bearish right now, but it's a lot greener than the Qs and SPY. So IWM is starting to outperform. As we come out of this daily cycle low, that's going to be important to know about. You want to ride the strongest horse coming off that swing low. And so IWM looks like that's probably going to be your one. And so that's the picture.